Hello friends, in this module we will discuss on chapter 3 admission of a partner, question number 16 to question number 20. First, coming to question number 16. L, M and N are partners sharing profits in the ratio of 3:2:1. They admit O into their partnership. O brings in cash rupees 4,50,000 as capital and rupees 1 lakh as goodwill for 1/5 share of profits. Pass journal entries and find out new profit sharing ratios when A. Goodwill is retained in the firm, B. Goodwill is withdrawn by old partners. Okay, let's do this. We have L, M and N. They share profits and losses in the ratio of 3:2:1 and they admitted a new partner O. He brings in capital rupees 4,50,000 and goodwill rupees 1,50,000. Okay, this is for 1/5 share of profits in the firm. So we need to calculate the remaining profit after giving 1/5 share of profit to Mr. O. Remaining share is equal to, assume that the total profit of the firm is 1. If we deduct O's share of profit, it is 1 minus 1 by 5. That is equal to 5 minus 1 by 5, which is equal to 4 by 5. So 4 by 5 is the remaining share of profit in the firm. Now we need to understand how much each of the partner will get as his new share of profit. So 4 by 5 is the remaining share of the share in the business multiplied by L's original share 3:2:1, so it will be 3 by 6. That will give you 12 by 30. Then we have M. For M, the remaining share is 4 by 5 and his original share is 2 by 6. So his new share is going to be 8 by 30. Then we have N. Remaining share 4.5 multiplied by his original share 1 by 6. Is going to give 4 by 30. And then we have O. It's given in the question that he is going to get 1 by 5 share of profit. If you want to keep the same denominator, it's going to be 6 by 30. Now we know the profit sharing ratios between all the partners. So L, M, N and O. It's going to be 12:8:4:6. If you simplify it a bit, it's going to be 6:4:2:3. Now we are also required to pass journal entries for this. So the first journal entry is that Mr. O has bought in cash rupees 4,50,000 as his capital and 1,50,000 as his goodwill. So journal entry first one will be bank account debit 4,50,000 plus 1,50,000. It's going to be 6 lakhs and he is bringing this as part of his capital. It's 2 O's capital 4,50,000. Then the remaining is towards goodwill. Okay, now this premium on goodwill has to be divided among the old partners in their sacrificing ratio. Here sacrificing ratio is same as their old profit sharing ratio. So it will be premium on goodwill debit 1,50,000 to L's capital to M's capital to N's capital. 3:2:1 ratio, so it is going to be 75,000, 50,000 and 25,000. Now if you look at the question has part B as well. Goodwill is withdrawn by all partners. So when cash is withdrawn from the business, it's going to be bank account credit and partners capital account debit. So answer to B is L's capital account debit 75,000, M's capital account debit 50,000 and N's capital account debit 25,000 to bank 1,50,000. So that's all about this question. Let's move to question number 17. P and Q are partners sharing profit and losses in the ratio of 2:1. They admit R into a partnership for 4/9 share in profits, which he acquires equally from P and Q. R brings in cash rupees 2,50,000 as capital and rupees 1,80,000 as goodwill. Pass journal entries and find out the new profit sharing ratio. So here there are two partners, P and Q, who is sharing profits in the ratio of 2:1. They admitted R for 4/9 share of profit. So again, this which he acquires from P and Q equally. So it is P and Q, it's in the ratio of 1:1. So first we will look at what is the sacrifice made by the old partners. So we have P, the new share for R is 4/9 and they say it is given by P and Q equally, so it is 1/2, which is equal to 4/18. Then we have Q, which is again 4/9 into 1/2, this is equal to 4/18. So we already know the sacrificing ratio, which is 1:1. Okay, now we need to find the new ratio. Okay, for the new ratio we have P, which is his old ratio is 2:1, so his existing ratio is 2/3, minus how much he sacrificed. He sacrificed 4/18 minus 4/18, which is equal to 12 minus 4/18, which is equal to 8/18. And then we have Q. His original share is 1/3 and he sacrificed 4/18, which will give 6 minus 4/18, that is equal to 2/18. Then we have R, his ratio is already given in the question, which is 4/9. If we wanted to keep the same denominator, it's going to be 8/18. So what's the new share between P, Q and R? It's 8:2:8, or you can simplify it as 4:1:4. That's a new ratio. We are also required to pass the journal entries relating to this. So what are the journal entries? One is that there should be a bank account debit because the new partner R is bringing in cash for capital and goodwill. So bank account debit. What will be the amount? His capital is 2,50,000 and his premium on goodwill is 1,80,000. So he's bringing in cash of 4,30,000 to our capital. It's going to be 2,50,000 to premium on goodwill. It's going to be 1,80,000. Now we need to distribute the premium on goodwill to the old partners in their sacrificing ratio. So premium on goodwill account debit 1,80,000 to P's capital to Q's capital. And what is the sacrificing ratio here? Sacrificing ratio is already given in the question. It's 1:1. So that's 90,000 and 90,000. So now let's move on to question number 18a. X and Y are partners sharing profit in the ratio of 4:3. Z joins the partnership for 2/7 share in the profits, of which he acquires 3/4 from X and 1/4 from Y. Z brings in rupees 3 lakhs for his capital and rupees 1,20,000 for goodwill. Half of the amount of goodwill is withdrawn by old partners. Pass necessary journal entries and find out new profit sharing ratio. Okay. So we have two partners X and Y. They are having profit sharing ratio 4:3, and they admitted a new partner Z for 2/7 share of profit, which he is acquiring from X 3/4 and Y 1/4, and he is bringing rupees 3 lakhs as capital and rupees 1,20,000 as goodwill, and half of this goodwill is withdrawn by old partners. Okay, now let's find the sacrifice. So here Z is going to get 2/7 share of profit. It is 2/7. He is acquiring 3/4 of this from X. So 2/7 into 3/4, that is equal to 6/28. And then Y, we have Z share, which is 2/7 multiplied by Y's contribution, which is 1/4. That is equal to 2/28. So the sacrificing ratio between X and Y is equal to 3:1. Then we need to find the new ratio. For X, his original share, it's 4:3, so it is 4/7 minus his sacrifice, that is 6/28. That is equal to 16 minus 6/28, which is equal to 10/28. Then we have Y. For Y, it is 3/7 his original share minus his sacrifice 2/28, which is equal to 12 minus 2/28, and that gives 10/28. Now we have Z. Z share is already given in the question. It is 2/7, and if you wanted to keep the same denominator, it is going to be 8/28. Now we have the new profit sharing ratio between X, Y and Z. which is equal to 10 is to 10 is to 8. Otherwise, if you simplify, it is going to be 5 is to 5 is to 4. Now we need to also pass journal entries for this. Okay, so we know that Z is going to bring 3 lakhs as his capital and 1,20,000 as goodwill. So for that, it is bank account debit 3 lakhs plus 1,20,000. It's going to be 4,20,000. 2 is its capital. 2 premium on goodwill. So that's going to be 3 lakhs and 1,20,000. And this premium on goodwill has to be distributed among all partners in their sacrificing ratio. So premium on goodwill debit which is 1,20,000 to X capital. It is sacrificing ratio is 3 is to 1. So X will get 90,000 and to Y's capital 30,000. The question also says half of his goodwill is withdrawn. So now, what's the journal entry for that? Okay, it's going to be X capital account debit, Y's capital account debit. Half of 90,000 is 45,000. Half of 30,000 is 15,000. And this is going to bank. 45,000 plus 15,000 is 60,000. So those are the 3 journal entries for 18A. Let's move on to question number 18B. K and Y were partners in a firm sharing profits in the ratio of 3:2 ratio. They admitted Z as a new partner for 1/3 share in the profits of the firm. Z acquired his shares from K and Y in 2:3 ratio. Z bought rupees 80,000 for his capital and rupees 30,000 for his 1/3 share as premium. Calculate the new profit sharing ratio of K, Y and Z and pass journal entries for the above transactions in the books of the firm. Okay. Now we have existing partners K and Y. Their profit sharing ratio is 3:2. They admitted Z for 1/3 share in the profit which he is acquiring from K and Y in the ratio of 2:3. He also brings rupees 80,000 as his capital and rupees 30,000 as his share of goodwill. Okay, now we need to find the sacrifice. For K, Z's share of profit is 1/3 and it's divided in 2:3 ratio, so it has to be multiplied by 2/5. That is equal to 2/15. Then for Y, Z's share 1/3 multiplied by his share, which is 3/5, which is equal to 3/15. So the new ratio. So we know that K and Y's original share is 3:2. So the new ratio for K, it is 3/5 minus his sacrifice. He sacrificed 2/15 minus 2/15 that is equal to 9 minus 2 by 15, that is equal to 7 by 15. Then we have y, which is 2 by 5 minus 3 by 15, that is equal to 6 minus 3 by 15, that is equal to 3 by 15. Then we have z share, which is already given in the question. It's 1 by 3. If we have to have the same denominator, it's going to be 5 by 15. So the new profit sharing ratio between K, Y and Z is going to be 7:3:5. Now we need to pass the journal entries for this transactions. One is Z is going to bring capital rupees 80,000 and goodwill rupees 30,000. So that's going to be bank account debit 1,10,000 to Z's capital 80,000 to premium on goodwill 30,000. Then this premium on goodwill has to be divided among the old partners in sacrificing ratio. So premium on goodwill debit 30,000 to case capital. The sacrificing ratio is given in the question, which is 2:3. So to case capital, it is going to be 12,000. To Y's capital, it's going to be 18,000. Okay, now let's move on to question number 19. Anju and Manju are partners, sharing profit and losses in the proportion 7:5. They agree to admit Meenu, their manager, into partnership, who is to get 1/6 share in the business. Meenu brings in rupees 2 lakh for her capital and rupees 96,000 for 1/6 share of goodwill, which she acquires 1/24 from Anju and 1/8 from Manju. The profits of the first year of the new partnership amounted to rupees 4,80,000. Make the necessary journal entries in connection with Meenu's admission and divide the profit between the partners. Okay, so in this question we have two partners, Anju and Manju. So Anju, Manju. Their profit and loss are shared in the ratio of 7:5. Then they admitted Meenu to their partnership for 1/6 share of profit, and this she's acquiring 1/24 from Anju and 1/8 from Manju. And she also brings in capital rupees 2 lakhs and goodwill rupees 96,000. Now we need to calculate the new profit sharing ratio for Anju. It's going to be her original share, which is 7:5, 7/12. Minus, she gave away 1/24 of her share to Meenu, so it is 1/24. This is equal to 14 minus 1/24. This is equal to 13/24. Then we have Manju. Manju whose original share is 5 by 12 minus she gave away 1/8 of her share to Meenu 1 by 8, that is equal to 10 minus 3 by 24, which is equal to 7 by 24. Then we have Meenu. The question says that she has 1/6 share of profit. So if you wanted to keep the same denominator, it's going to be 4 by 24. So the new profit sharing ratio between Anju, Manju and Meenu is equal to be 13:7:4. We are also required to pass the necessary journal entries. So we will pass journal entries now. First thing is bringing capital and goodwill. So we will have our bank account debit 2 lakh plus 96,000. It is going to be 2,96,000 to Meenu's capital 2 lakhs and to premium on goodwill. $96,000. Then this premium on goodwill has to be divided among the old partners in their sacrificing ratio. So premium on goodwill debit 96,000 to Anju's capital to Manju's capital. Okay, so that's going to be 24,000 and 72,000. Okay, that's based on their sacrificing ratio. Now we also have in the question, it's mentioned the profit of the partnership is rupees 4,80,000. So we need to divide this in their new profit sharing ratio. So that journal entry will be P&L appropriation account debit 4,80,000 to Anju's capital to Manju's capital to Meenu's capital. That's going to be 2,60,000 for Anju. That's based on the new profit sharing ratio, which is 13:7:4. 2,60,000 for Anju, 1,40,000 for Manju and 80,000 for me. Okay, now let's move on to the next question, that is question number 20. X and Y share profits and losses in the ratio of 3:2. They admit Z as a partner who pays rupees 72,000 as premium on goodwill for 1/4 share in the future profits of the firm. Pass journal entries appropriating the premium money and show the new profit sharing ratio in each of the following cases. First case, if he acquires his share of profit in the original ratio of the existing partners. So here we know there are two partners, X and Y. They have profit sharing ratio which is 3:2, and they admitted Z as a new partner for 1/4 share in profit. Okay, and he pays a goodwill of 72,000. And we have the first case, if he acquires his share of profit in the original ratio of the existing partners. So original ratio of the existing partners is 3:2. Okay, now we will calculate this. So in this case, Z's share 1/4 is coming from X and Y in his original share, which is 3:2. So the sacrifice here is for X, it's going to be 1/4 into 3/5. That's this ratio in which they have given this. So 3/5 is equal to 3/20. Then we have Y, Z's share is 1/4 and he is giving 2/5. So that is equal to 2/10. Now let's find the new ratio. New ratio is X. It's going to be 3/5 minus 3/20. That is equal to 9/20. Then we have Y. His original share is 2/5 and his sacrifice is 2/20. That is equal to 6/20. Then we have Z. His share is given in the question, it's 1/4. If we wanted to keep the same denominator, it's going to be 5/20. There is a small correction here. Here it's 4 into 5, it's also 20. By mistake I wrote it 10. Okay. So now we have the new ratio for X, Y and Z. The new ratio for X, Y, Z is 9:6:5. Then we have the second scenario. If he acquires his share of profit in equal proportions from the existing partner, that means what? We have X and Y, their existing ratio is 3:2, and we have Z who got 1/4 share in the profit, which he is acquiring equally from X and Y. That means 1/2 and 1/2. So we want to find the sacrifice here. Sacrifice here for X is Z share 1/4 multiplied by half of it. That is equal to 1/8. Then Y, it's Z share 1/4 multiplied by half of it. That is equal to 1/8. Then we have to find the new ratio. The new ratio for X, his original share is much. His original share is 3/5. 3/5 minus his sacrifice 1/8. That is equal to 24 minus 5/40. That is equal to 19/40. Then we have Y, his original share is 2/5 minus 1/8. That is equal to 16 minus 5/40. That is equal to 11/40. Then we have Z. It's given in the question that his share is 1/4. If I wanted to keep the same denominator, it's going to be 10/40. So the new profit sharing ratio between X, Y, Z in this scenario is 19:11:10. Okay, now the third scenario, if he acquires his share in the ratio of 2:3 from existing partners. Okay, X and Y are partners, their profit sharing ratio is 3:2, and in this scenario Z is getting 1/4 share of profit from X and Y in the ratio of 2:3. So first we need to find the sacrifice. For X, it's going to be 1/4, which is Z share, into 2/5. That is equal to 2/20. And for Y, it's going to be 1/4 into 3/5. That's equal to 3/20. Now we need to find the new ratio. We know the existing share of profit for X and Y, which is 3:2. Now we need to find the new ratio for X. His existing share is 3/5 minus the sacrifice he has done, which is 2/20. That's equal to 10/20. So Y, its existing share is 2/5 minus the sacrifice he has made, which is 3/20. That's equal to 5/20. Then we have Z. We know his share is 1/4. If we wanted to keep the same denominator, it's going to be 5/20. So in this case, the new profit sharing ratio between X, Y and Z is going to be 10:5:5. If we simplify it, it's going to be 2:1:1. Then we have the fourth scenario here. If he acquires his share of profit as 7/32 from X and 1/32 from Y. So again, X and Y are partners, their profit sharing ratio is 3:2, and Z is admitted as a new partner for 1/4 share in profit. He acquires this from X and Y in 7/32 and 1/32. So X, his new share is existing share 3/5 minus 7/32 that he has sacrificed for Z. That's equal to 96 minus 35/160. That's equal to 61/160. Then we have Y. It is 2/5 minus 1/32. That's equal to 64 minus 5/160. This is equal to 59/160. Then we have Z. His share of profit is already given in the question, 1/4. If you want to get the same denominator, it's going to be 40/160. So the new profit sharing ratio between X, Y and Z in this scenario is going to be 61:59:40. That's all for this session. Please subscribe to the channel so that you don't miss out on further questions.